So, as the Fed rebalances their perspectives on the markets and inflation and jobs, does that bring up the question, what now? And should we be looking at our portfolios and doing something similar? Good morning, ladies and gentlemen. Hope you're having a wonderful start to your week, or happy Sunday if you guys are watching it when the video goes live. Yeah, the Fed came out and greenlit rate cuts. We are now in the rate cut narrative, 100% having rate cuts this year, especially with Powell coming out and saying those exact words of the time is here to shift our policy. And boy, did the markets like that as expected. We were expecting a more neutral tone. However, he went full dove, and that was the surprising thing. So the question is, what's going to be the balance of risks for this week? We're going to be going over the NVIDIA play for earnings. We're going to be talking about the levels for the market today of what we need to pay attention to this whole week that you knew if you followed our last week in deep dive that we had to stay bullish this entire week, bought every single dip, and you made money going to the upside on top of talking about that retest. NASDAQ was a beautiful retest of the 50-day moving average, which was fantastic, right? Nice hard bounce on that level that we talked about in last week, and where I said you would ultimately want to bounce off the 50, buy it up, going into Powell, right, was a bit riskier, but it was rewarding. So I do expect S&P and NASDAQ to be at all-time highs this week. We're going to get into how that can happen. And also, we're going to give equal lumps of coal to the bears and the bulls because, boy, both teams are making mistakes. Both teams are over leveraging. And we're going to be talking about how you can stay balanced in this market, make money, whether you would go up, go down, or absolutely sideways. So let's recap the week with the first thing that we're going to go over, which is net speculative positions. Bears, please, for the love of God, stop shorting this market going into a bull rally. Like, guys, how many times has this worked out for you? Please throw it in the comment section below. If you short the market and it goes up, in what screwed up reality do you make money? Please, I genuinely need to know, because at this point, we're past the definition of insanity, because doing the same thing over again, expecting a different result, you would eventually learn. You're like the dumb orangutan shocking itself while the other button dispenses fruit, right? You don't learn. And I was praising all of you when the market was going down and we were net long on this. And I was like, wow, good. We're actually going to get some smart bears, and they finally learned their lesson. Oh, but nope, right out the window. Scrap that. So again, this is where the bears are going to get humbled, and this is the fuel that can actually get us higher, because there's 84,000 positions that have to close as we're higher on the week, right? We did not break to a weekly lower low. So if you initiated all your positions, even at the low, or even at the high, you're still losing money or barely break even. And all it's going to take is a slight rally to the upside to basically make you lose all that money and continue losing. We saw what happened in the past where we basically shorted this market. Hey, a crazy 15% rally. So why can't that happen right now, right? We have the fuel, we have the weekly higher highs, we have the narrative that will psychologically push people to do dumb things. And I use that word specifically because longing in this market for a long term, thinking you're going to have a bull rally, is a horrible idea. However, markets can stay irrational longer than you can stay solvent. And yeah, it's just been a bumpy ride, and it's been a fantastic ride, right? There's been plenty of opportunities to make money to the upside. There's been plenty of opportunities to make money to the downside. And let's jump over to some of the more riskier assets, right? Bitcoin pounding up above the 50-day moving average and continuing higher. Bitcoin retest 67,000. That's where I'd be looking to get bullish on it. I'll throw out a video when that happens. So make sure you guys are subscribed to the channel so you know when that video comes out. We're also going to be covering NVIDIA, right? NVIDIA's earnings are this week, and I'm looking to play bullish on NVIDIA. I'd be looking at that 120 number. If we get any depreciation in NVIDIA going into this earnings, I will be full on bullish on it, because for the sole reason that if we're not front running the expectations, that means people are more complacent or more weary that we're not going to have that. And when NVIDIA blows out through AI demand, we could see a massive 20-30% day on NVIDIA, because it's just been going sideways. The last time NVIDIA went sideways into earnings, well, we got this crazy rally, right? Let's just talk about going sideways into earnings, blast off, right? So looking very similar, bigger range right here, but going sideways, blast off into earnings. I don't foresee the depreciation already because everyone that was going to sell already sold and they're going to be FOMOing into it, right? There's a high probability of FOMO occurring. Even though you may not believe that earnings are going to be X, Y, and Z, I openly was when NVIDIA was at $16 million in revenue or billion or million, right? Let's check. Yeah, so when it was $16 billion in revenue that we were expecting, I said, there's no way this is going to hit that. And they hit it, and it hit it, and it hit it, and it hit it. And it's like, okay, how many times can I be wrong before I learn my lesson? And a lot of people haven't learned that lesson. All the sellers are gone. Time to buy bullish on NVIDIA. And the analysts are expecting, even though you may disagree, right? You may think it's a horrible thing, but the market consensus is up. And you have to play the market consensus, not your feelings. So enough ranting about NVIDIA, Bitcoin. We also have to touch base on VIX, right? Just a public service announcement for VIX. This thing's probably going back down to $12 because the market's very, very complacent, especially with Powell calming everyone's mentality, right, of no fearfulness. We do have PCE, right? So we cannot stay complacent, but we do have PC on deck this week. And we're going to be talking about all the current events in the debate section of the video towards the end. So if you guys want to skip to that, it'll be timestamped down below. But yeah, let's talk about the levels that we have to for the market. And we're going to start off with the S&P first. So jumping into the S&P first, right? I love when we have contracted ranges like this because it means that you have very, very low cost basis to make a lot of money, right? If we get a continual breakout, we're talking about blue sky breakout. You long those all the way because they're blue sky breakouts. The NASDAQ is in a bit of a more tricky place, and we'll go over that in just a second. But looking at this, I would not want to see lower appreciation than the Friday low. That's where I'm going to start getting concerned that we may actually be breaking down to the downside. Anything above 557.29 all the way up to 563.18, I'm going to be bullish all the way. I'm going to be looking at calls, selling puts, writing calls to the upside, especially with VIX coming down. I may even look at the selling the put side because decrease implied volatility overall, along with a delta move in your favorite direction, will crush those puts relatively quickly. And there's not a lot of downside potential because I have a lot of early warning signs, right? 557.29 breaks, get out. If 553.86 breaks, then you just completely start shorting the market looking for that 50-day moving average retest and gap fill. However, we're not even going to talk about the downside potential because first of all, you need to break several different levels before we get down there, and talking about it is not going to be worth your time. It's going to be worth looking at what the bullish scenarios are going to be. When 386 breaks, that is when you start talking about the bullish scenarios. I'll come out with a video for you guys, so make sure you guys are ready for that. And subsequently, we're going to be pushing to the upside is my belief, especially when we're going to have the open stream. We're going to try doing a stream on Discord. So Discord's linked down in the description below where you guys can join. We're going to try doing a market futures open on Sunday stream. So it's going to be quite interesting. First time we're going to be doing it, but it should be a fun one, right? So we're going to talk about trade ideas and what futures are doing and probably playing some future trades as well. But 563.18 is what you really want to look. 563.18 and higher, you're slapping on bull calls, you're selling puts, you're rotating into options, you're playing bullish, right? Whatever fits your boat for the continuation of what you like to trade, right? Simple as that. As simple as I can make it. Whatever you like to do, play bullish on above 563.18. Look to position size bullish anywhere between there and 557.29. However, understand that breaking of 557.29 is where you stop maybe, and then look at, okay, do I need to reassess? Do we break 553.86? And subsequently maybe leverage into some more bullish plays with caution right now, going full on leverage into the market until we get back above that 563.18 number. So NASDAQ's even a sweeter story, right? We actually have the 50-day moving average as our level where we don't want to be anywhere near this thing. We want to see NASDAQ gap and go. That would be the ultimate strategy for Monday is we see a gap and go. We could see a gap up, fill the gap, and then rotate 12 o'clock usually is the time that we see that bullish rotation in markets, and then above 485.54 would be that bullish sentiment in the markets. Right now, we're closing right at 480, 50-day moving average sitting at 474.68. So that is where you necessarily want to stay completely bullish the market. Nasdaq's going to be your pressure gauge for bullishness and bearishness in the market. And also, we can talk about the Russell, right? The Russell, I said, if this thing starts pushing, we saw with Powell's speech, I'm looking to see if Russell breaks this high of 224, because that would mean if small caps rally along with bigger caps, that's going to be a true bullish run in the market, even though I don't fully believe that it will hold over a set period of time going into next year. It is not what I believe. It is what the market consensus is and the price action that's represented on the charts. If you guys want to keep shorting this thing like the bears are, go ahead. You're just going to transfer the wealth from the people that are looking at the charts to not looking at the charts, or are thinking fundamentally of what should be happening, right? They're not ignoring what's in front of their face. And RSP, right? Continuation, massively bullish as we saw. So we're seeing a broader rally in the entire market. That's why we saw the fear and greed index cranking all the way from basically 50 all the way up to touching greed. So that's going to be very, very important for us going into the rest of the market. And let's just quickly recap some of those bigger cap stocks that are going to be on deck this week, right? So looking at Apple, looks like it fizzled out energy-wise, but could be reinvigorated, especially if we start challenging that 240 highs, right? Microsoft in this kangaroo, right? We saw the classical bear flag pattern. This is where I'm concerned about a little bit for Microsoft, but we really need to see appreciation. Could be an interesting bull play, right? This could be one of those hidden gems bull plays on the market. Amazon, again, similar story. Microsoft, Amazon, that's going to be on the shopping list for this week because they have high potential bull plays on it if the market runs. That means it gets above the 50, gets further rotation. There's a higher percentage that money can dump into because we're going to rotate out of companies that are oversold into overbought. So similarly, like Netflix, right, has a massive push, bounce off the 9-day moving average, and you can use that 9-day moving average as a gauge of whether it to be bullish or bearish on a particular stock. Tesla, kind of in a chop fest. I'm not going to necessarily touch it until we get above 234 and then look for that gap fill on Tesla around here. However, still looking strong and bullish as we see now. AVGO, again, having earnings in September, but NVIDIA sympathy play. This could be an interesting one, pushing above 185, especially if NVIDIA rockets up. Google, obviously, again, a lot of these tech companies are in this like prime look bullish. So Microsoft, Amazon, Google, all going to be added to the shopping list this week. Meta actually may be one of the more bearish ones just because it's stalling out. So Apple and Meta are kind of one of those you have to watch out for that momentum to shift backwards. But Google, Amazon, Microsoft, NVIDIA, definitely going to be the bullish plays that I'm looking for this week. And also, we got crude, right? Crude coming back from the grave. Now, the question is, are those lower gas prices going to sustain, or are we going to see a depreciation in crude because we're heading into recessionary fears? Usually we talk about this on the debate, but it's going to be an interesting topic, right? Throw it down in the comment section below of what you guys think is going to happen with everything. And as usual, yields just took a bit of a tumble, but they didn't take much of a tumble. We're going to discuss that in the later part of the video of why this may happen and share my theory with all of you. TLT did close higher, however, looking like it's a little bit weaker. So with that, guys, we're going to jump over to the biggest winners and losers section of the video, and then we will be back for the debate section of the video where we're going to discuss various things. We're talking about treasuries, talking about crude. We're also going to be talking about where we see the future for the markets and a reality check for the bulls in there because I have a fun article to share with you guys. So if you guys want to watch the biggest winners and losers, that's up next. Or if you want to skip to any part, timestamp everything down below. So we'll see you in a little bit.
So I am back, and again, sorry guys for not being on yesterday's stream. My child decided to pull a fast one on us and give us the scare of our lives. More on that later on, though. Don't really want to talk about that right now. We'll get to that maybe some other time, maybe during a live stream or so. But I wanted to be here, guys, because it is the weekend deep dive, and well, I kind of want to do my part for this. So with this, let's actually see how the markets did so far this week. As you guys can see, the S&P 500 on the 5-day. Wow. So massive catalyst week, obviously, with Jackson Hole, with Powell saying it is now time, which is just absolutely insane, right? Absolutely insane. I'm just like, okay, you're basically playing up to everybody now, and we all know what's going to happen next, right? We all know what's going to happen next. Market's just going to absolute rally. Everything's going to go through the roof. Things are just going to go bonkers. Could be wrong on that, but odds are that's what markets want. Therefore, I think that's what we're essentially going to get. You can see that, well, 1.28% on the 5 days. You guys can see that right there. And just on Friday alone, obviously, 1.15%. Absolutely insane. Now, taking a look at this week's upcoming earnings, massive catalyst. We got, well, first of all, on Monday, we don't have much, right? On Monday, we have like Heiko, Trip.com. I don't really know too many of these. However, Tuesday, actually, we still don't have much. We got Scotiabank, we got Umbrella, Nordstrom, Joy, Sentinel One, which, you know, with the whole CrowdStrike thing, Sentinel One was one of the ones that got a massive boost. Wednesday, we got the big one, NVIDIA or NVIDIA, whichever one you guys say it. I don't know. But we got NVIDIA on Wednesday after close. We got Chewy, we got CrowdStrike, Salesforce, Kohl's, Foot Locker, Bath and Body Works, Abercrombie and Fitch, Affirm, Five Below, HP, and Schmuckers. A lot of these companies have been very volatile this past quarter. SJM Schmuckers fell massively. Remember that, guys, just like a few months ago or a few weeks ago? It fell massively. Hopefully y'all guys bought because it's back down, because now it is back up to where it was at around like $120 to $125. But NVIDIA definitely going to be the biggest catalyst here, and it will 100% break or make the semiconductors as well as the technology sector. On Thursday, we got Best Buy, Dell, Dollar General, Ollie's, Campbell's, and Ulta Beauty, Lululemon. Sure, actually Lululemon has been falling off a cliff as well. Could be an interesting one to look at. And on Friday, we got Frontline, Jinko Solar, and Mini SO. So now for the heat map. I'm not going to put my face cam just so that way you guys can see all of it, but let's take a look at this heat map. All of this is in the green. All of this is absolutely in the green. And starting, of course, with the technology sector, worst performer here, it really is easy to determine. It is Intuit, basically the company that does the taxes. A company I considered buying into, but never really gotten a chance to do it. Really need to do a lot more research on it. Fell 5.15%, and the best performer was none other than this company out here, Keys. Keys Technology, if I'm not mistaken, was the best one by the looks of it, guys, gaining 14.57%. Now taking a look at the communications sector. All of this was mainly in the green. Worst performer here was the company Charter, losing 1.3%. And the best performer, it is the company Warner Bros. Discovery, gaining 8.64%. Looking now into the consumer cyclicals. Once again, a lot of these were deeply in the green. Worst performer, it is Domino's Pizza falling almost 4%, 3.98, guys. Wonder if I would need to do another discounted free cash flow on this one, but very interesting. But this was the worst performer, and the best performer seems to be, let's see if I can actually find it really quickly, and I probably don't have to cut right here, hopefully not. Seems to be, I think it's that one, guys. It is PHM, gaining 10.23%. Yeah, it's definitely that one, 10.23% on PHM. Looking now into the consumer defensives, worst performer here, it is the company Dollar Tree, losing 1.8%. Again, not a lot of red here. Actually, maybe it wasn't Dollar Tree. One second. No, sorry. It was not Dollar Tree. It was actually Kroger, losing 2.33%. And the best performer seems to be, it's Target. Wow, guys. Target back up to $158, gaining 10.04%. Again, remember when this company fell sub $100? Yeah. Again, the controversies didn't really affect it. In fact, we went to Target a few days ago because we needed something for the child, and it was jam-packed. It was absolutely jam-packed. Even the self-checkout line, everything was like, we waited on the self-checkout line. So Target is a company that they have great fundamentals. I don't foresee this company going away, even with the controversies. They scaled that back quickly. And, well, the stock price kind of shows that. So hopefully y'all guys bought. Tell me if you guys bought, actually, when this thing fell sub 100. And if you still hold it to today, because you did get a really nice dividend yield when it comes to that one. Looking now into the financial sector. Worst performer here, really easy to find. It's actually the red. It is the company Franklin Resources, losing exactly 8%. And the best performer being none other than the company, let's see if I could actually find it, 6.09. Seems to be the company, guys, Arc Capital Group, gaining 6.31%. Looking now into the healthcare sector, a lot of green. Everything is in the green, basically. Just a few pockets of red here and there. Worst performer here, it is none other than the company Walgreens. This thing has just cratered, absolutely cratered. So, yeah. $10.30, guys, losing 5.68%. And the best performer in the sector seems to be none other than the company Stryker Corp, gaining 4.56%. Looking now into the industrials, worst performer here, it is Boeing, losing 2.79%. And the best performer, it is the company, seems to be, is definitely this one, Builders FirstSource, gaining 13.08%. Looking now into the real estate sector, all of this was in the green except for one company, and that was Equinix, losing, actually, it was essentially flat, losing 0.08%. Best performer here, though, seems to be none other than the company Public Storage, gaining, 6.74%, guys. And realty income is now above $60, $61.09. You had such a great amount of time to buy into this company, sub $50. Let me know if you guys did it in the comment section below, because that is just absolutely crazy. You guys are making bank. I know I bought a lot lower than this. I think I bought like at around like $53, $52. So, I have, this is my most amount of shares I have, I believe, for any company, either that or second most at, I think like 200 plus. So really am happy with this $50 per month on dividends. Really like it. Now, next we got the utility sector. Again, a lot of green here as well. Worst performer, Southern Company, only losing 1.42%. And the best performer, it is the company Vistra, gaining 8.09%. Looking now into the energy sector, worst performer seems to be the company Valero, losing 2.64%. And the best performer, EQT, if you guys could barely see that, but seems to be the company EQT, gaining, you guys can't see that, but it's gained 4.63%. And lastly, when it comes into the basic materials, most of these were in the green, which is fairly surprising. This sector seems to be very volatile usually. And only 3 companies here lost, guys. We got APD, essentially flat, losing 0.07%. Next up, CF Industry Holdings, losing 0.69%, which is essentially tied with the worst performer of Dow, DOW, losing 0.7%. But everything else massively in the green. And the best performer, it is Albemarle, gaining 14.02%. All in all, guys, when it comes to this market, I'm telling you, when these cuts arrive, I do not foresee any red. So yeah, that's going to be quite a sight to behold. Not necessarily liking it, because it'll be very difficult to find opportunity. But then again, the one thing giving me a white pill is that Warren Buffett sold. So just keep that in mind. Anyways, that pretty much does it for this segment, guys. Again, thank you guys so much for being so patient with me this past week and for the weeks to come, because unfortunately my son is not out of the woods yet. But hopefully one day he'll be home and you'll hear him scream on the mic, because that will be very, very fun. Nonetheless, though, guys, thank you so much for watching this segment. With that said, take it away, Mike.
So I want to start with the news for today, but I want to first get into a couple other things that I have. It's been a crazy week, right, with Powell, and I would argue even a 2-week thing of Powell's craziness. But I want to share an article with all of you, and you as well, that brings back chills, especially because of what happened afterwards. And would you be so kind, sir, to read it?
Markets soar after Fed cut key rates by 0.5 point.
And the date.
Isn't that... it's nearly to the year, or to the month, and even to September 18th, 2007.
7 would be 70? No. Yes, 7, almost 20, no, 14 years ago, right?
14 years ago. And we all know what happened right after that, right? Yeah. We all know exactly what happened right after that. And I don't know, because are they still trying to go with the 50 or the 25? What's the CME?
So I think we can brainstorm what will happen, right? So right now CME Tool is expecting 76.24. We also had Powell that say, if the data continues the way we're going, we will give you X, which to me is 25, right? And his expectation, I'm assuming, is inflation continuing down at a slow rate. Any faster rate will be welcomed, right? Because he's not going to say no to that. But then subsequently, if we see jobs deterioration, if you get A, but you don't get B, which is jobs, right, sustaining, then they will act by doing a 50 to stimulate the economy.
Right. Because obviously we know that if jobs come in at much lower than expected, which a bunch of them, 818,000 job loss, right? We know that jobs coming in below expectation or even just below previous month, we know that means that things are pretty bad. Right?
Yeah.
That things are very, very bad.
That you're accelerating the deterioration that we saw in the last jobs report. And also, I have a question for you. What do you think the unemployment number is going to be, right? Because that 4.3% was based on 818,000 jobs, right? Like, how is this going to factor into everything with, we didn't create all these other jobs, so therefore, like, is those people unemployed, or they're like, how's the Fed going to reconcile that?
Well, this will essentially, depending on what happens, obviously, I wish I could tell the future, but I can't. But depending on what happens, this would essentially take a sledgehammer and a jackhammer at the same time to the skull of the
dual mandate,
soft landing. Soft landing narrative.
Yes.
So the whole soft landing narrative, because it just shows that we're not getting a soft landing and that the Fed can't do a soft landing.
Yeah.
Right. It's just an impossibility. So that's essentially what that's going to lead to. And yeah, job numbers come in much lower than expected, or even lower than that of last month. And if unemployment goes up, I think it was like 4.3 last time.
Yes.
If it goes up to like 4.5, if it goes up by another 0.2 or more, forget about it.
The Fed has said we won't see unemployment past 5%. That's what they said. That's what Harker says, that they're not going to see.
They also said transitory inflation, which, by the way, he did mention in Jackson Hole.
Oh.
He did mention it.
No. He can't get over it. It shows they haven't learned, because if you've learned, you wouldn't spend 5 minutes talking about shipmates of the transitory ship. I'm like, dude, have you, like, how bruised was your ego that you have to bring this up, right? Like,
the reputation. The whole entire reputation. He spent like what?
A good 5 minutes. A good 5 minutes.
He spent like 6 months saying transitory, right?
Yep.
Am I not? Like, I don't think I'm incorrect about that. I think it was like six to 9 months saying that it's transitory, and then they were like, it's not. It's 9%. It's not.
Yep.
So
hike, and then it was and it's gonna be the same story all over again, because I don't know if you noticed, but gas prices are going down, right? And
yes, they are.
Which is very interesting, considering crude is actually looking for a little bit of a comeback, right? So if we jump over to crude, right, most likely, and the yellow lines represent the previous month's crude prices. I have that so that we can reference for the CPI data, which I do believe is going to come in good considering this, right? If we look at the totality, majority of the prices have transacted below that level a year ago, and gas prices are going down. But the question openly comes up to, are they going to start refilling the SPR reserves now?
Right.
And does that create a floor for crude?
Because if they start refilling, that means they're going to have to start buying.
Yep.
And when you buy, well, you bring the price up.
Yep. And actually, we can see that they actually did buy about 2.5 million barrels this last week. U.S. Energy Department contracts have awarded for the acquisition of nearly 2.5 million barrels of crude oil for the Strategic Petroleum Reserve. So the second that came out, August 23rd, we can jump back to crude to see what it did, right? August 23rd, when that news came out, and straight line up, right? So crude traders were like, oh, they're buying, buy. And it's like, then they pulled the Jim Cramer.
Yeah, I mean, especially when when the U.S. government's buying, it's like a guaranteed thing.
Oh yeah,
So
it's a guaranteed floor. So everyone's like they're perceiving higher oil prices than currently in the future, and also Powell I think fueled it as well, because if you look at the commodities across the board on Jackson Hole, the moment he said we are shifting our like prioritization focus, whatever words he used exactly, every single commodity went through the roof.
right,
And I'm like, what does that tell you?
even gold.
Gold, silver. Yeah, we can officially reach 2,500 on a closing basis, and it's just, what does this tell you, right? It tells you market participants don't believe inflation is vanquished, because if the dollar was going to be deflationary, these prices wouldn't be going up. They'd be doing the opposite, because goods would be more affordable in the future. So you wouldn't mandate a higher price. And speaking of that, I also want to touch base on treasuries. You would have expected on Jackson Hole, we got a drop in treasury yields, which is an increase in their value. You would have expected a lot more than this.
Yeah. It's almost like they're just staying the same.
Or what do they believe? They believe that the Fed is done fighting inflation, and that there's going to be inflation in the future that they're going to have to fight. So therefore, I want to demand a higher yield for that risk.
For the longer contracts.
Yeah, and also in proportion to, right? So when we say higher yield, right? So if you didn't believe inflation was going to come back, your yields be down in this area here. Straight line down.
And this is what, on the 30?
This is the 30, but it was across the board. We can look at the 30, we can look at the 2, right? All of them are basically saying that they believe inflation is going to still be here in the future, and thus they're not demanding lower yields for it. They're basically saying there's still a risk. There's still things that we are not prepared for, right? We're not seeing this. On top of, we got in the Middle East kicking right back up with literally like hours ago, Israel striking Hezbollah, right? And everyone's like, oh, not thousands of short-range rockets, right? Netanyahu's saying also, the event today is not the end of the story, right? So basically promising further escalation in the region. Now, markets really haven't been participating in this area, right? Because we've seen them go back and forth, but
that's not true, actually, because when Iran hit, granted, Iran is not Hezbollah,
yeah.
But when Iran hit Israel, or Hezbollah is not Iran, sorry, but when Iran hit Israel, crude prices shot up instantly,
yes.
And markets just fell because it was during futures open, and that did happen. I don't necessarily know how Hezbollah, because Hezbollah is not exactly like an official, I guess you could say, state.
Yeah, you're not escalating to where nuclear war is on the table, right? If it's just a state actor versus a local actor, it's different than a state actor versus a world power, right? Two world powers, really two world powers going at it, because Iran is just a proxy for Russia, the same way Israel, for lack of a better term, is a proxy for the U.S. And whenever you get those two big dogs at each other's necks, everyone plays the worst out in their heads, versus where we've only seen, like, peace talks degrade, peace talks come back, and all this back and forth. The market's been like, meh, I really don't care. So it's going to be interesting on futures open.
I mean, it's also going to add a little bit more uncertainty as well, right? It's not correct to say that, everything is hunky-dory, or like this won't affect anything. No, there is going to be a little bit of uncertainty, but I think it'll just be overshadowed by other news, like what we're getting this week, which, if I'm not mistaken, it's PCE as well as GDP.
Correct. Right? And we can actually go through the news real quick, and then we'll wrap up. So Monday, horrible to good orders, right? Atlanta Fed GDP now, they're expecting 2%, previously 2%. Let's see if this degrades further, because it went from like 2.8 to 2. So let's see if we get further degradation. Again, that's not the whole nation.
Oh my goodness.
Now, hold on.
If GDP goes down.
That's not the nation GDP. That's just the Atlanta Southern region. Okay. Hold your horses. You do get GDP this week. We also get consumer confidence on Tuesday. We're going to see if the consumer is still strong, right, as everyone keeps telling me. but I don't believe 1 second. Wednesday's going to be mute, really. And then Thursday, well, I take that back. Wednesday's NVIDIA earnings. So it's going to be bonkers that day. Everyone's going to be talking about it till they're blue in the face. But we get GDP on Thursday, which is going to be the expected 2.8 flat, right? The previous one got revised the last time we were here, but I'm curious to see if it sticks around 2.8, right? We're going to see, has that government spending worn off? Is the consumer strong? And do we get further contraction? Do we start flirting with sub 2%, right? We saw 1.4 the last quarter officially as the preliminary prints came in. It just kept dropping and dropping and dropping. Do we get a significant drop in GDP? And does that put into question the recessionary tone back into market? Because it keeps resurging, right? They talk about a recession, then it goes away. They talk about a recession, it goes away. They talk about a recession, it goes away. So the question is, are we going to have continuation of that like loop-de-loop narrative? And then finally, we get PCE. And they have not published expectations, those darn rascals, right? Because they always want to hide that to the last very moment. They're expecting PC prices month over month to increase from 0.1 to 0.2. Personal spending to stay the same or increase month to month for July, right? Yeah, personal spending, but income to stay flat. So again, more spending, less income, or flat income is stagflation. And we don't have anything for core yet, so we will obviously keep you guys updated when all that comes out. And then they're also having Michigan 1 year and 5 year inflation expectations and consumer expectations. So it's going to be interesting what the consumers are thinking. We've seen all these go up subsequently, the expectations of inflation. Unlike when Powell said, well, the consumer is pricing in lower inflation. I'm like, no, they're not. They're just pricing in instead of like boiled in oil, it's boiled in water. I'm still getting boiled alive. It doesn't matter. Then result is the same.
Right. Just a little bit more comfortable, I guess you could say. But all in all, I'm assuming that when it came to markets this week, I saw what we did on the 5-day. Are we at like a greed territory or what's happening?
You're knocking on the door. You're very, very close. So 55 is official greed territory, but you're only 2 basis points essentially away from that range.
Not basis points.
Or 2 ticks.
You're 2 points. You're 2
2 ticks away. But I think you're going to get greed. I think because you got majority of the market participants shorting the market, right, on net speculative positions. We saw what happened last time. This thing went all the way to extreme greed the last time that happened. We have the stage set for Powell, right? They're going to basically keep thinking the numbers are going to come in good until they don't, right? So we have to play in that mentality of the market for this whole week.
Right. You also have NVIDIA earnings on Wednesday, which
it's going to be bullish. Everyone knows.
It's going to be bullish. It absolutely is going to be bullish.
Whatever they come out with, as long as they hit the number, it's bullish, right? They are not going to, it's like this little sphere, little bubble, right? Eventually will pop. Probably when I go full bullish on it, it'll pop, right? No, just the market will love me for that, but
it always does, right?
It's like Mike played calls in NVIDIA and he's going higher than last time. Oh, time to short NVIDIA.
I just short it, yeah. But I mean, if NVIDIA does go up, then I mean, good for me because I guess I could I'll make more capital gains when it comes to my AVGO, which by the way, I do believe AVGO is in September.
Yeah,
September
5th.
11th.
September 5th.
September 11th, if I'm not mistaken.
Let me go check.
I'm fairly certain it is September 11th, good sir.
Let us go check. I did click on it. It's September 5th.
Okay, so they changed it.
Yeah,
it was September 11th.
1 week up.
I do remember that.
1 week up.
And I'm looking at the revisions right now. It is 28 revisions, 20 to the upside, 8 to the downside. That will change.
So basically, when NVIDIA comes out, it'll change.
Right, yeah, that will change based off of
NVIDIA is probably like 36 to 3. I think that's what I last saw for NVIDIA.
Correct.
And I'm like,
it's something crazy like that.
Yeah, and you're what, like an inch away from all-time highs on NVIDIA. So I'm like, okay, guys.
Oh, no, it changed.
Ooh.
And a lot.
Is it all to the upside or downside?
No. 19 up, 12 down.
All right, I take that back. I'm not playing NVIDIA earnings then.
Nearly 50-50. I'm looking at it right now. Yeah. 19 up, 12 down. Believe it or not. That's wow. Okay.
Oh boy.
Yeah, that was not like that. That was not like that on Friday or even yesterday because I saw it and it was not. It was like 36-3 or something like that. I'm like, oh okay, but no, apparently not. This just
That doesn't spell good news.
No, it does not.
All right. Well, I'm definitely not playing NVIDIA earnings, and I'll give you guys the option plays for the upside downside, but I am... Yeah, this violates the rule for me. It has to be skewed one way or another for me to play it. So, yeah, I'm going to sit back and watch the carnage.
So, guys, I think those are pretty much going to end it right here. Before we head off, though, I do want to mention, right now, I don't know if this is going to happen or not, because as you guys know, my life right now is just complete another chaos. Live streaming has become, or just live streaming and making videos has become like tertiary at this point. I had the idea today to make a market talk live stream where basically at Futures Open, we would go on the Discord channel, and Mike and we would talk with all of you guys on the Discord, whoever wants to stop by. And we would talk about, like, the catalyst for this upcoming week, where we think everything is going. We would just essentially like a sit and talk for like about an hour or so. I kind of want to do that around 6 p.m. Eastern Standard Time. I don't know anymore. Something just came up literally like 17 minutes ago that may not be able to happen. I don't know. Okay, but if you guys see a live stream pop up at around 6 p.m. starting time 6 p.m. today, that's basically that. And I encourage everybody to join the Discord and to stop by and chat. We're going to have certain rules, or at least I'm going to try to have certain rules. It'll be on the honor code, but I think for the first time we'll do it, and then we'll see how that goes. Basically, again, it'll be like a sit and talk, market talk kind of thing. Just me, Mike, and then anybody who wants to join the Discord to talk about stuff, okay? And we will be live streaming it to both YouTube and Rumble, so, there's going to be certain guidelines here and there.
Yep.
But that's just the plan for me for today. If you guys see the live stream pop up, then that means I'm doing it. If you guys don't see it pop up, then I'm not doing it. So, all right? Yeah. Mike, that's all I got to say. Why don't you sign us off?
All right. So, guys, remember that fateful day many, many years ago where we got this. History doesn't repeat itself, but it definitely does rhyme. So make sure you guys balance the risks, like Powell is saying, right? He's giving you a slight hint to make sure you balance the risk to your portfolio during the week. We'll keep you guys updated of what's going to be going on in the markets. So make sure you guys are subscribed to the channel, have bell notifications on, and on your way out, if you guys wouldn't mind hitting the like button down below. And we will see you in the next one.
Peace.